So M&A has been one of the final frontiers in terms of where ESG is coming into play. And what I mean by that is, while environmental, social, and governance metrics have been considered in different forms in due diligence processes in the past, we're starting to see that be a specific component in the due diligence process. In some cases, buyers or sellers are positioning their assets or looking for assets that have specific characteristics to reshape their company and to either add value or to work towards a different type of corporate strategy. All that being said, there's no real standardization around the E, the S, or the G topics. I think what I've been seeing from the Middle East and North Africa companies and countries is a desire and a willingness to ensure that they are at a level playing field with US and European companies when it comes to participating in these types of transactions and demonstrating regional leadership in the topics. It's good to ensure that there is a renewed focus on thinking about E, S, and G characteristics. But we do need to make sure that we divide them among E, S, and G characteristics and not make it one ESG word. And what I mean by this is to say, if you go to someone outside of the ESG space and give them that statistic, they're going to be very surprised. But when you start digging into saying, well, there were pollution issues, or there were anti-bribery and corruption issues, or there were labor dispute issues, and those started to impact the outcome of the deal, those are E, S, and G impacts. And so that's where we do actually start to see that is likely a relevant outcome. But it's really about classifying and focusing and identifying what the parameters are of those different topics. While data is asymmetric and data quality, data availability continues to be a challenge, and I think all corporates are working to improve that, and there are a lot of different efforts both from the United Nations and from civil society as well as from the private sector to push that forward. I think that people are doing what they can with the best information that they have. What I have seen in the Middle East and North Africa is a renewed focus on the S component. Now, S, the social issues, are very region specific, and that region specificity is really important in terms of raising the profile of transactions and appealing to investors in a way that we haven't seen coming out of particularly Europe and the US. From my perspective, I look at a lot of the publicly available industry pathways and guidance, because as a financial institution, our responsibility is to be a provider and facilitator of capital, and we want to do it in a way that is responsible. And what I mean by that is to say there are excellent frameworks out there like the Transition Plan Task Force, like CDP, like GRI, like the ISSB, all of whom have come out with standards, frameworks that are helpful in terms of defining the parameters that can help us make good determinations on what would be considered responsible financing. It's an exciting opportunity for a lot of different parties to come together. One of the things that we've seen happen here at COP is the launch of the Impact Disclosure Task Force, which looks across financial institutions, investors, and some of the multilateral development banks, as well as the service providers, to say, how can we look at these different frameworks and think about which metrics could be applicable from a topic perspective and a region perspective in a way that can be approachable, understanding that some of the existing frameworks may not have originally been designed to meet the needs of all countries and all regions.